Today we're going to go ahead and do an overview in regards to what is credit, the different factors that impact your credit, and how do we keep you with a good credit score moving into the future. Why is good credit important? Biggest factor is it determines whether a financial institution is going to approve you for a loan or if they're not going to approve you for a loan. It definitely impacts the term and the rate that you'll be receiving on a loan. It could impact things such as auto insurance. It definitely takes into consideration and affects the amount of money that you'll put down on big purchases such as your first mortgage and the utilities that you have to activate once you have the house. So what is your credit score? Also known as a FICO score. No one really knows how it's calculated as it is an undisclosed algorithm. What we do know and can tell you is that 3 companies can show you what your FICO score is: Equifax, TransUnion, and Experian. Most credit scores will range from the lowest 350 to the highest, which is 850. What impacts your credit score? Let's begin with payment history. 35% is based off of the payment history. Let's take into consideration that your payment date is due on the 5th. Can you pay it on the 20th of the same month? Yes. Will you be charged a late fee? Yes. Will that impact your credit? No. For it to impact your credit, you have to be late 30 days. Next, we'll move on and you will see that 30% of it is based off of amounts owed, also known as capacity. So capacity, to put it in a nutshell, would be if a financial institution gave you a $1,000 line of credit, you definitely don't want to owe more than 30% of that $1,000 line of credit. 15% is based off of the length of credit that you have. So if you have a credit card and you just started it, what we're looking to see is you building your credit so that it goes to 3 months, 6 months, and then a year. And the longer that credit history is, the better your credit score is going to get, as long as you keep into consideration that your capacity is in line and your payments have been made on time. Finally, the types of credit that are used. Experts will tell you that you want to mix it up and have 3 different types. Normally, you want to have something that is revolving like a credit card. You want to have something that is fixed with an amortized payment like an auto loan, and hopefully into the future, a mortgage payment or maybe 2 or 3 credit cards at max in your name. So when a financial institution is going to make a decision as to who they're going to lend to, these are the type of things that they'll look at. We're giving you an example here in which we have person A and person B. Person A has been given a $20,000 line of credit, which means they can use it up to $20,000. And currently, as they applied for the loan, they only owe $4,000. Person B was given a $5,000 line of credit, and they have pretty much maxed it out to $4,000, very close to hitting the 5, owing 80%. So, financial institution has to make a decision, normally or most of the time. Person A is going to get the loan, as they have shown that they are more responsible in having given a $20,000 line of credit and keeping it at a very low capacity. Maintaining a positive credit score. Pay your bills on time. You don't want to close old credit cards, because when you close them, you're pretty much eliminating the old history that you have built. Watch your credit capacity. Credit card alerts. Credit card alerts pretty much will let you know what you're spending, when you're spending it, and it's a good reminder of how maybe we have to stop using them. Limit applying for credit. Once again, you don't want to apply all the time just because you're being offered 10% off on your purchase or 20% off on your purchase the day that you're there. And finally, review your credit. Make sure that once a year you are taking a look at your credit and that the loans that are reflected on there are loans that you applied for. Make sure that everything there is in order and is reflected correctly. How to build credit. Here are some tips on how to start your credit or go ahead and improve the credit that you currently have. Focus on credit mix. You want to make sure that you don't only have one type of credit, have some credit cards. You definitely in the mix want to have a fixed payment like a personal loan or a car. Consider a secured credit card. Those are always great for when you're first starting off. Reduce your overall credit. Of course, as you start to pay down the debts that you owe, your credit score is going to be impacted, which means it'll be going up. And we recommend that if you need some help or you're struggling with your credit score and you need it to come up, maybe become an authorized user on someone's credit card. Protecting your credit. In protecting your credit, you want to keep in mind the following things. Monitor credit and statements. Monitor your credit, like we said, once a year, and make sure that you monitor your statements monthly so that the balances that are on there are the actual balances that you should be carrying and the payments are reflected as well. Review online transactions. Make sure that the transactions that you are seeing online are in line with what you've been doing, especially if you have your credit card set up for automatic payment on the different purchases that you have, like streaming services. Use digital payments. We encourage digital payments because it makes it a lot harder to be able to create fraud on your account. And finally, consider credit freeze. Credit freeze basically will not allow a financial institution to run your credit, and it will not let you run the credit unless you've provided the 4-digit PIN that you originally set up. Partners Wellbeing is an interactive online resource available to you 24/7 and in various languages. There you can find tools such as putting together a budget, managing your debt, saving for retirement, and so much more. With that, we're going to wrap up, and hopefully today we've enabled you with a little bit of tools and some knowledge. Again, we thank you for joining us. Have a wonderful day.